Hey everyone, a very good evening to all of you. Welcome to the RBI Circular Masterclass. I hope your preparation is going well, right? And this is basically a masterclass to complete your RBI circular. So in a very crisp manner, in a very short duration, what you can do is you can cover a lot of RBI circulars from this particular class, right? So this is the second class, and today we are going to start. I think in the yesterday's class, in the last class, I think we have covered August month and half of September month. And as all the circulars are out now related to the September month, let's complete the September month, rest of the half, and then we'll be moving to the July and June circulars, right? So let's start the discussion, guys. Yes. So we have covered at least this much, okay? Not the complete 26 September because this I think is pending settlement of claims in respect of the deceased customer and bank, and 29 September circulars are pending, right? So first we'll be concluding these kind of circulars or related to September, and then I'll be starting with the July month and the June month, right? Let's start the discussion, guys. The first one, settlement of claims in respect of the deceased customer. So guys, this is more of a process oriented circular, right? So I'll be telling you like what things can come from this particular circular, because I can say that 70% of the portion, 70 to 80% of the portion in this particular circular is more of a process based. Good evening, Bhakti. Good evening. Let's start this one first. The very first thing is, why do we even need a circular related to settlement of claims in case of deceased customer? Because there is a big issue. When I talk about a deceased customer, the legal heirs or the nominee, they are quite facing certain difficulties because every regulated entity is a different process. If you go to Punjab National Bank, the process is different. If you go to Bank of Baroda, process is different. If you go to HDFC Bank, the process is different. That's why we need a consolidated guidelines, and that's what they have stated here. Speedy settlement of the claims after the death of the customer to reduce the hardship to the family members. So here, this is a foolproof, single shot, standardized circular for all the things related to the deceased customer. The effective date, the very first thing that you need to know is 31st March 2026, right? Closure of financial year, 31st March 2026. So the bank needs to comply with this particular guideline not later than 31st March 2026. What is the applicability? All the commercial banks, all the cooperative banks needs to follow. Though there are two exclusions, all the government schemes, all the government saving schemes, like it can be PPF, it can be senior citizen saving schemes, right? Public provident fund and senior citizen saving schemes, these are the exclusions. So we don't have to follow this particular circular for these two government schemes, right? For any government saving schemes basically. And there is a threshold in this particular circular. Now this can be important for your examination, right? This particular threshold can be important for your examination. 5 lakh for cooperative banks, 15 lakhs for other banks, and bank may set a higher limit as well. So bank can willfully set a higher limit of more than 5 lakh, more than 15 lakh for both cooperative banks and other banks respectively. Sir, what is this threshold all about? We'll be definitely discussing about this threshold. But first, let's get a basic understanding of this particular circular. Acha, if you guys do have an idea of the basic banking services, whenever I am having a deposit, let's suppose there is a fixed deposit of Mr. A, right? Mrs. A can also be part of that particular fixed deposit if they do have a survivorship clause. Now, what do you mean by survivorship clause? Either or survivor, right? Mr. A or Mrs. A, either or survivor, either of them can operate, or any survivor can also operate. Let's suppose Mr. A passed away and Mrs. A can also operate on behalf of Mr. A, right? So this is a clause, either or survivor, anyone or survivor. So these are survivorship clause which are attached to the accounts, right? Then what other things you need to know is the full form of the OVD, which is officially verified valid document. It can be Aadhaar, it can be passport, right, as per the KYC directions. What things that you need to know is, the very first thing is account with nominee. Let's suppose the customer passed away, right, and the account is having a nomination or it is having a survivorship clause. Then I can say it is one of the most simplest method. If you do have nominee in your account, if you do have survivorship clause in your account, the process is quite simple. Verify the identity of the nominee. What the bank needs to do is just verify the identity of the nominee or the survivor and the death certificate, right? So identity plus the death certificate is required, right? No court restriction should be there on the payment. Plus clarify in writing that the nominee receive as a legal trustee. Now what do you mean by this particular line? Nominee receives as a trustee for legal heirs. So nominee is not actually the legal heir, right? Nominee is actually not the legal heir. Legal heirs can be different, right? So nominee is just entitled to distribute, to act as a trustee for distributing the legal heirs. There are cases where legal heirs and nominee are same, but technically, if a person is nominee, it is a trustee of that money. He or she needs to distribute it to the real legal heirs. That's what the law is, right? So it's clearly stated here, clarify in writing that the nominee receives as a trustee for legal heirs. I'm already saying you that it's too process oriented, right? So the most important thing as per my understanding is this threshold. You need to remember this threshold. You need to remember this date, right? So if your account is having the nomination, if it's having the survivorship clause, then just the identity of the nominee and the death certificate again will be good enough to claim that particular deposit, right? However, if your account is without the nomination or without the survivorship clause, then it can be difficult, right? Then it can be difficult. There can be two cases here. Claim up to the threshold limit. Now, what was the threshold limit? This is my threshold limit. If it's a cooperative bank, the claim is up to 5 lakh. If it's a other bank, the claim is up to 15 lakh. If the claim is up to 5 lakh and 15 lakh respectively, then the claim is within the threshold. If the claim is within the threshold, there is lesser amount of risk, right? So that's why there is a simplified settlement requirement. No nomination or survivor clause, koi baat nahi, it will be fine. No will is there, no dispute is there, no court order is there, no problem at all. You need to give the claim form, you need to give the death certificate, OVD of the claimant, whosoever is claiming. We need an official valid document, right? Plus legal heir certificate or any kind of declaration by an independent person is required. Basically, in all the cases, legal heir certificate is required. That's it. You don't need any kind of succession. You don't need any kind of succession here, right? If I talk about the claim is crossing the threshold, that means the limit of 5 lakh or 15 lakh, whatever the limit is, it is crossing that particular threshold. That is a problem. In that case, you need a succession certificate from the court, plus the legal heir certificate, plus an affidavit by the independent person, right? And the bank may also demand a surety bond. Now, what is a surety bond? Basically, let's suppose this particular nominee or this particular legal heir has already claimed the money, but maybe there is a legal dispute in the near future. Somebody claims that he is also entitled to a part of this deposit. So that's why bank takes no risk in it. They sign a surety bond that in case of any future liability, the legal heirs will be completely liable who are claiming the money, basically, right? Yahan tak clear sabko? Any queries still here? I know it's a complete process oriented circular, but we cannot do anything about it. We just need to have a good understanding of the dates, a good understanding of the threshold, and the basic process, right? So it looks like we haven't ignored anything in from this particular circular. At the same time, we don't have to go into too much details of the circular because this is meant for actually the banks. They need to comply with the circular, right? You guys need to just have a basic understanding of this circular. That's what a RBI officer, RBI Grade B officer needs to do. There should be a smart preparation when it comes to circular, because not reading anything is because not reading everything is harmful, but at the same time reading everything is also harmful in case of circulars. We need to make it super exam oriented, right? Okay guys, perfect. So if your claim is above the threshold, then there is a risk element. That's why the bank is demanding the succession certificate and the legal year certificate plus an affidavit by independent person. And the bank may also demand a surety bond as well, that please give a surety bond that in case of any issue in the near future, you will be also liable, right? Claims involving will. If there is a involvement of will, that means the person has written a particular will, right? The person has written the particular will, the deceased person, and now all the things related to the settlement will be mentioned in the will. So accordingly, the bank will definitely settle the things if there is no dispute on the basis of that will. But there is a dispute. If there is a dispute, then the will doesn't matter. In case of dispute, we need a order from the court, right? So order of the court document is required, and then only the bank will be discharging that particular deposit, right? No surety bond is required. Why? Because the court has already ordered. So any kind of future liability, we don't care about the future liability as a bank. Why? Because already the court has ordered certain judgment, right? Credit after settlement. Now what does credit after settlement means? Let's suppose there is an account number 111, right? The account number is 111 of customer A. Now Mr. A is no more. Still, in this account there is a credit. In this account, let's suppose there is a credit of 1 lakh rupee, maybe dividend income, right? Maybe a dividend income, maybe a dividend income. Now the bank needs to clearly return the amount to the remitter, right? The bank needs to clearly return the amount to the remitter. That too, you need to punch a mark, account holder deceased, right? So that the remitter, the sender, can also get an understanding, okay, that Mr. A is as of now no more, right? So bank needs to follow this particular guideline. Premature termination of FDs, definitely Mr. A is no more. So whatever FDs he is having, all the FDs will get matured, right? In that case, it is allowed without any kind of penalty, right? Because for premature FDs, for premature termination of FDs, there are certain penalties, but because Mr. A is no more as of now, so there won't be any kind of penalty, right? So for any kind of joint FD, the survivor consent is required, legal heirs of the deceased is required, right? If mandate is given earlier, then survivor can also withdraw the same without the legal heirs, because already there's a mandate. In case of a missing person, let's suppose we are not able to trace a particular person, and if the deposit amount is up to 1 lakh only, right? Less than 1 lakh, not up to 1 lakh, but it should be less than 1 lakh. Plus, FIR and a non-traceable police report is again sufficient for the legal heirs to withdraw that particular money. Now, I'm again telling you, it's more of a process-oriented circular, right? So just we need to understand the major things rather than going into too much detail here. Then if I talk about the locker and safe custody, let's suppose Mr. A is having a locker as well in the bank. So we will be getting the custody of that particular locker. So if there is a nomination in that locker, if there is a survivorship clause attached to that locker, no problem at all. The nominee or survivor can definitely access the locker and remove the contents as well related to the locker, right? Then in case of no nomination, no survivorship clause, then it becomes a problem. There is a simplified procedure now. No nomination, no survivorship clause, and no dispute is there, then no problem at all. You need to fill the claim form. You need to give a death certificate, your OVD, official valid document, NOC from any other legal heirs, and legal heir certificate is required. That's fine. And in case of any kind of dispute, the court order will be only accepted here, right? In case of dispute, we always accept the court order, right? Now this can also be important for your examination, the time limit. Let's suppose a person, a legal heir of Mr. A, has already filled the form. Nominee of Mr. A, or maybe the legal heir of Mr. A, has already filled the form. Then within 15 days from the submission of all the documents, the bank needs to disburse, the bank needs to settle that claim, right? The bank needs to settle the claim within 15 days of the submission of all the documents. And if I talk about the locker, again, the timeline is 15 days only. 15 days, close it from the date of application, basically. Right? And if you are not able to service that within 15 days, then a penalty, a compensation, if that's a deposit, let's suppose it's a FD, then bank rate plus 4% penal charges you need to pay as interest for that kind of delay. So please do remember this timeline and this compensation. In case of any kind of deposit, bank rate plus 4% per annum. Okay, it's yearly rate. Whatever bank rate is prevailing plus the 4%, you need to pay interest for the delay. Plus, in case of any locker, 5,000 rupees per day is the penalty. 5,000 rupees you need to pay per day. So that's the amount of compensation and time limit that you need to remember here, right? So what things you will be remembering here, guys, from this particular circular, I will advise you guys: the objective, the date, the threshold, right? The basic understanding of what happens when there is a nominee, what happens when there is no nominee but there is no dispute as well. No problem at all. We need legal heir certificate. When there is a dispute, we need court certificate, right? If the limit is crossing the threshold, then we need succession certificate as well. The bank may also sign the surety bond as well, right? So these are the basic things that we need to remember from this particular circular. Plus, time limit and compensation can also be important, right? Next one. Okay, sir, what is the effective date? So the effective date here is, I think, 31st March 2026, right? Yes. Not later than 31st March 2026. That means by 31st March 2026, you need to at least comply with the provisions. If you are a bank, if you are a financial institution, if you are a regulated entity, then at least by 31st March 2026, you need to implement this circular practically, right? You need to implement this circular anyhow by 31st March 2026, right? Then, guys, the next one is the interest rate on the advances. Interest rate on the advances. So this is not a full-fledged direction. This is the amendment direction. Let's discuss this one as well. So earlier, we had a circular related to the interest rate on advances, 2016. Then we had a circular on the reset of floating interest rate on EMI-based personal payments, right? So this is more of a amendment rather than a entire circular, right? So what kind of amendments are there in this particular circular? Earlier, let's suppose there's any kind of change, right? Let's suppose the Reserve Bank of India is changing the repo rate, right? The benchmark rate. There's a change in, there is a reduction in the repo rate. So will the bank immediately pass this? Will the bank immediately pass this on all the loans? So earlier, the bank could change the spread only after a specified minimum period, that is generally 3 years, right? So this was the earlier case that used to happen, but now the banks can even reduce it before the 3 years, but only for customer retention, right? Only for customer retention. Obviously, the bank has to offer a better deal to retain that customer. Must be justifiable grounds. Must be following a non-discriminatory approach, right? There should not be any kind of discriminatory approach. There should not be any kind of favoritism. Like if I am a bank, I'm giving the benefit of that particular reduced interest rate to only select customer. It should not be the case. Oh, sir, can you please give an example? I couldn't understand. No problem at all, Sudarshan. I'll be giving an example as well. Let's discuss this one. Say, for example, my interest rate is 9%, right? I am a customer. The bank is charging an interest rate of 9%, but because of the reduction in the repo rates or the benchmark rate, now the rate should be 7%, say, for example. So earlier what used to happen is the bank could charge the spread margin only after a specified minimum period, right? The bank could definitely change this margin. So bank used to charge 9%. Now the bank can charge 7%, but only after 3 years. That used to be there. But now the bank can give me immediate relaxation of the reduced interest rate before the 3-year period only, right? So now the bank can reduce my rate to 7%. This is what spread is all about. 2% is the spread here, right? 2% is the spread here. What the bank used to charge and what the bank should now charge. That's what spread is all about here. Now they can give me the benefit of this particular spread, that too before the 3 years only. Earlier the period was 3 year, but now before the 3 year also they can pass me the benefit. But it should be for the customer retention. It should be justifiable. It should be non-discriminatory and within the bank's internal policy. That's what the simple amendment here is. Then earlier the circular stated that RE shall provide an option to switch to fixed rate. Now let's suppose if I am having a 9% loan, that's a variable rate loan. If the rate is changing 7%, I'm demanding for lesser interest rate. I'm demanding for lesser interest rate, right? However, there was a word shall earlier in the provision that the bank shall provide an option to switch to the fixed rate of interest. So whenever there is a change, the bank can give me an option that I can move to a fixed rate system instead of a variable rate system, right? In fixed rate, there won't be any kind of changes. But as of now, they have replaced the shall word to may word. So it is optional for the REs. It is optional for the REs to provide such a kind of option for the customer to switch from variable rate to fixed rate now, right? Then the borrower may get an option to switch from floating to fixed rate only if RE's internal policy allow. Now the RE is going to allow me only if there is an internal policy that okay, if there is a change in the rate, then we can give it an option as a give it an option to the customer that okay, if you are not fine with the variable interest rate, what we can do is we can give you a fixed interest rate loan. We can convert your loan into fixed interest rather than just the floating one, because maybe the interest rate is increasing, maybe the interest rate is decreasing. So as per the RE's internal policy, now the RE may give you an option. It's not compulsion. Earlier it was a compulsion. Now RE may give you an option, right? So that's what the change is basically here. That's what the change is. So I've summarized each and everything for you guys in a tabular format as well. You can just complete this amendment by just having a look at this particular table as well. It will also be fine, okay? Because इसमें ऐसा कुछ बहुत ज़्यादा, there is not a major change in this, right? Just a basic 2-word change is there in the entire circular that you need to know. That's why I have given a table as well. Okay. Then there is a Reserve Bank of India lending against gold and silver collateral. So this direction came in, I think, June or July, right? And in today's session, if time permits, definitely we'll be covering this particular direction as well. Lending against gold and silver collateral. Do you guys remember this particular circular? I think it came in June or July. Do you guys remember this circular? Anyone? Yes. Great. So there are some amendments here in this particular circular. What they have added is the lender shall not grant any kind of advance or loan for the purchase of gold in any form, including primary gold, ornaments, jewelry, coins, or for the purchase of any financial asset backed by gold. Example, units of exchange traded fund or units of mutual fund. Let's suppose the bank won't be granting any kind of loans and advances on the basis of units of ETF or mutual funds, because they are not real gold, right? They are financial instruments. They are financial instruments which are backed by real gold, definitely, right? Which are backed by real gold. But they are actually gold? No, they are not actually gold or silver. They are financial instruments. They definitely do have gold backing, but still they are not gold. That's why they have clearly written that for the purchase of any gold, a lender shall not grant any kind of loans or advance for the purchase of any gold in any form which is backed by gold units or mutual fund units, right? Then against primary gold or silver or financial asset backed by the primary gold or silver, provided that the scheduled bank, now this can be important, provided that the scheduled commercial bank or a tier 3 or tier 4 UCB, urban cooperative bank, may extend a need based working capital finance. Now what do you mean by working capital? Any idea what is working capital, guys? What is a working capital? Can any one of you tell me quickly? Day-to-day capital which is required to do the business, right? Current asset minus current liability. Yes, business needs. So in order to run the business, I need some working capital. So the scheduled commercial bank or a tier 3 and tier 4 UCB may extend a need-based working capital to the borrower who use gold or silver as a raw material. Let's suppose I am a gold dealer, right? I have a business of gold and silver, right? So I use gold and silver. As my raw material. So I can definitely take loan from scheduled commercial bank or a tier 3, tier 4 UCB, but it should be based on my working capital needs, right? It should be based on my working capital needs, but at the same time, the bank needs to ensure that I am not using this particular gold for investment or speculative purpose. Why? Because I'm a businessman. I deal in gold. So that should be related to my business only. The gold or silver should be related to my business only, right? So I can only receive that loan if I'm actually using it as my raw material. And the bank, what they need to ensure is that I'm not using that gold for speculative purpose or any kind of investment purpose, because working capital loans are business loans, right? What is a working capital? The money that I need in order to run my day-to-day operations. So it should relate again. It should completely relate here. Next one is regarding your Basel III capital regulation, perpetual debt instrument. What is PDI? Any idea? Perpetual debt instrument, those debt instruments that don't have any kind of redemption. That's why we call them as perpetual, right? They will continue to go. Perpetual, PDI. In the additional tier 1 capital, so there is a quick update here. You just have to read this particular line. That's all. It's just a one-page circular. This line is important. The perpetual debt instrument issued in foreign currency or maybe rupee denominated bonds overseas shall be eligible for inclusion in AT1 capital. I can include this in AT1 capital up to a maximum of 1.5% of risk weighted assets. Whatever my risk weighted assets are, calculate 1.5% of that. I can include this PDI, which is issued in foreign currency or maybe rupee denominated bonds overseas. I can include this in my AT1 capital, but only up to 1.5% of the risk weighted assets. So can you tell about the PDI in short? Okay, no problem at all, Sudarshan. What is PDI? Perpetual debt instrument. What is a debt instrument? If I have issued a debt instrument to you, let's suppose I have taken 1 crore rupee from Sudarshan and I have issued him a PDI, perpetual debt instrument. Now what is this perpetual debt instrument? Because it's a debt instrument, I'll be paying you regular interest, right? Monthly or annually. Because it is perpetual, I will be never paying you your 1 crore rupee. But I will always continue to pay you interest. That's what perpetual debt instrument is all about. Perpetual, never ending, right? It's perpetual. Okay, so usually it is included in the AT1 tier capital, but because this perpetual debt instrument is issued in foreign currency or maybe rupee denominated bonds overseas, not in India, this shall also be allowed to get included in the AT1. I can include this in the AT1 capital, but there is a restriction of 1.5% of risk weighted assets. First calculate the risk weighted assets. Calculate 1.5% of it. That's the maximum limit you can add in this particular bond. in the 81. And please do remember, this is a foreign currency or rupee denominated overseas PDI, right? So this can directly come in your examination. Please do remember this maximum limit of 1.5%. What you need to study is 1.5% of risk weighted assets. This limit can directly come in your examination. Okay, right? But हाई प्रोबेबिलिटी दैट ये फेज 2 के अंदर आएगा रादर देन फेज 1 के अंदर. नो डाउट, आई एम नॉट सेइंग कि फेज 1 में नहीं आ सकता, इट कैन कम इन द फेज 1 एज वेल, बट ज्यादा प्रोबेबिलिटी है कि इट कैन कम इन द फेज 2 एग्जामिनेशन, राइट? Okay guys, now let's talk about the July circulars. August wale we have concluded, September wale we have concluded. Now let's move to the July circulars, right? And if time permits, we'll go to the June as well. This direction is on prepayment charges on loan. Do you guys remember this particular circular? And what things you are able to recall? Can you just type it quickly in the comment section? Let's see how much you guys are able to remember this. What points you guys are able to remember from this particular circular? Any idea, anyone? Prepayment charges on loan. What do you mean by prepayment? Let's suppose I have taken a loan of 5 years. Now I am just prepaying it. Will the bank impose any kind of charge? Yes, it can. The bank can. However, there are certain relaxations given in this particular direction. Nobody is able to remember? Any point? You can write in short as well. Okay, let me just quickly cover this one. So what is the background basically? The problem identified was RBI supervisory review found that different regulatory entities, different regulated entities have inconsistent practice. Let's suppose I have taken 4 loans from HDFC Bank, from Axis Bank, from PNB, from BOB, from SBI, 5 loans. All the loans are of 1 crore. Now I've taken that loan for 5 years, but I'm prepaying it right now. All the banks do have different practices. Some banks are imposing the prepayment charges because they thought that they will be getting interest from me for the next 5 years, but I'm prepaying it right now, just after 1 year. Just after 1 year, right? So that's why they're imposing a penalty on me, a fine on me. That's what a charge called as prepayment charge, right? That's what the meaning of prepayment charge is. Now, because every bank is having different procedure, that's why we need a consolidated guideline so that all the banks are on the same page, right? All the banks are on the same page. Now, this direction applied to commercial banks, excluding the payment banks, obviously, because the payment banks are not giving any kind of credit. They are not allowed to give credit. So that's why they are excluded. All the commercial banks, all the cooperative banks, NBFCs, and all India financial institutions. This is the applicability. What is the effective date? What is the effective date? Loan sanctioned or renewed on or after 1st of January 2026. So Happy New Year is the code, is the memory technique, right? Happy New Year, here is the memory technique. Is this applicable for all types of loan or only to the personal loan? So that's a good question. We'll be definitely covering this, right? I have summarized this thing in a table. Definitely give me 2 to 3 minutes. I'm covering this, okay? So 1st of January 2026, what is the applicability? Commercial banks, cooperative banks, NBFCs, AIFI, right? The very first thing that you need to know is RE should adhere to the following directions regarding the levy of prepayment charges on all the floating rate loans and advances. Floating rate, all the floating rate. ठीक है. RE shall not levy any prepayment or charges in case of individuals. If the borrower is individual and he has taken a loan for non-business purpose, no prepayment charges. All the REs cannot charge any charge, cannot impose any prepayment charge, right? All the REs cannot impose any kind of charge. If I am an individual, I have taken a loan for non-business purpose, not for business purpose, RE cannot impose any charge, right? RE cannot impose any charge. If I am an individual or a MSE, right, medium and small enterprise, and I have taken loan for business purpose, I have taken loan for a business purpose. Individual, MSE, business purpose. If commercial bank is there, but excluding SFB, excluding RRB, excluding LAB, that means small finance bank, regional rural banks, local area banks, they can charge. But commercial banks, rest of the commercial banks will not charge. Tier 4 cooperative banks will not charge. NBFC's upper layer won't charge. Rest of the NBFC can charge. EIFI cannot charge. No charges will be there. If the lender is commercial bank, Tier 4 cooperative bank, urban cooperative bank, NBFC upper layer, AIFI, they won't be charging. But scheduled in the commercial bank, small finance bank, RRB, local area bank, they can charge. This table is important. If you are able to just quickly read this table multiple times, your circular is already half done. If you are an individual or MSE, your loan is for business purpose, and you have taken a loan from small finance bank, regional rural bank, Tier 3 urban cooperative bank, central cooperative bank, NBFC middle layer, no charges will be there if the sanction limit is less than equal to 50 lakh. That means if your loan is up to 50 lakh, no charges will be there. But if it is more than 50 lakh, then charges will be there. Then the small finance bank, RRB, Tier 3, UCB, NBFC, middle layer, they may charge it from you if the loan is exceeding 50 lakh, right? So this table can be important for your exam. Right, and it doesn't matter whether you have paid the loan fully or partially, it doesn't matter. Prepayment is made from any source, it doesn't matter whatever your source is of the prepayment. There is no lock-in period, right? No lock-in period is required here. Any queries in this one? Any queries in this particular table? You just have to remember this table. If you are able to remember this table, then already half of the circular you have covered. Right? Any queries still here? Anyone? Yes, only in cases of floating rate, right? Because the circular is stating all the floating rate loans and advances. That's why. All the floating rate loans and advances. For fixed interest rate, this particular circular is not applicable, right? Perfect. If RE is initiating the prepayment, if the bank is initiating the prepayment, that we have not even initiated the prepayment, why we are going to pay any kind of charge? So there won't be any kind of charge, right? There won't be any kind of charge if the RE is initiating the prepayment. Okay, guys. Next one. Basel III capital regulations. It's nothing but just a recognition of one more entity, CareEdge Global IFSC Limited. CareEdge Global IFSC Limited. So that's External Credit Assessment Institution. It has been decided to permit banks to also use the rating of CareEdge Global IFSC Limited. Please do remember the name of this particular entity. For risk weighting their claims on the non-resident corporate originating at the IFSC. So at IFSC center, the banks can also use the services of CareEdge Global IFSC Limited. Earlier, the bank only used the ratings of different credit rating agencies like Fitch, Moody's, S&P, but now the banks can also use the service of CareEdge Global IFSC Limited. So we are just recognizing a particular entity here, right? We are just giving a recognition to this particular entity via this circular, right? Okay. Then the next one is lending against the gold and silver collateral. Voluntary pledge of gold and silver as collateral for agriculture and MSME loan. So usually these kind of loans are collateral free, right? Still, if a borrower wants to pledge that particular gold or silver as collateral, will it be treated as a non-compliance? No, it won't be treated as a non-compliance. So there was a confusion that will it be treated as a non-compliance of this particular PSL loan if the borrower is voluntarily pledging some gold and silver as collateral, because it's a collateral free loan. So RBI has clearly stated there that it won't be any kind of non-compliance. Will not be construed as violation of any guideline as regards such collateral. So it's just a clarification. Okay, it's just a clarification. Next, again, is not so important, inclusion of the NSDL Payment Bank Limited in the second schedule. So it's also now a scheduled bank, NSDL Payment Bank Limited, right? Then this is a draft direction, right? This is not a final direction. This is a draft direction. So what you need to do is you need to just read this in a very crisp manner, right? Plus it's an interesting direction as well because it relates to a chapter derivatives. It relates to a chapter derivative. So it can be more important for your phase 2 purpose basically, right? Still, we are just covering it in a very crisp manner in case one questions come in phase 1 so that you are able to at least counter it, right? This is a draft direction, but considering the importance of this particular circular, I'm covering it. OTC derivative. What is OTC? Can anyone tell me what is OTC? What is OTC derivative, guys? What do you mean by OTC? What is the full form of OTC? Over the counter, right? Over the counter, perfect. So there are two types of contracts, exchange traded and over the counter, as the name says it all. If it is a exchange traded, a exchange is already there, right, to facilitate that transaction, or exchange is already there. However, if it is a over the counter transaction, let's suppose I'm making a transaction with Bhakti, right? That's a OTC contract. But if I'm buying a particular stock or futures and options on NSE, BSE via a broker, that's an exchange traded contract. This particular circular is only applicable to the OTC, over the counter. As the name says it all, we are just sitting on a counter and we are just negotiating the terms and condition of the contract, right? This is regarding novation in the OTC derivative. Now, what is the meaning of novation? One party is going, another party is entering the transaction. Let's suppose there are three parties. The party to the contract are 1 and 2. 1 and 2 are already the party to the contract. However, 2 is going out, 3 is coming in place of 2. The third party is coming in place of 2. That's what the novation meaning is. That's what the meaning of novation is, right? Substitution of one party with another. So this will give a new contractual relationship. Why? Because earlier the contract was between 1 and 2, and now the contract is going to be between 1 and 3, because 2 is going out, 3 is coming in, right? Who will be the transferor? The one who is exiting the contract. He is transferring the contract to someone else. That's why he's called as transferor. Who will be the remaining party? Obviously, Mr. 1 will be the remaining party because he is remaining in the contract. The old party is going, the new party is coming. Mr. A is the remaining party. Transferee is 3. 3 is the transferee, right? So 1, 2, and 3, right? So 2 is going out, 3 is coming in. That's why we do have a novation in the OTC derivative contract. Basically, they both have undergone a OTC derivative contract. Let's suppose me and Bhakti have formed a OTC derivative contract. I am going out of the contract and Sudarshan is coming in the contract. So that's called as novation. There's a new party in the contract. That's why we call it as novation, right? Now, because there are three parties, there will be a triple agreement. There needs to be a triple agreement, right? That's why we call it as tripartite agreement, where the transferee steps in. The transferee steps into the contract and the transferor is going out of the contract, right? Now, what things you need to remember here is, first of the thing, the meaning of OTC contract, the meaning of novation, right? Then what you need to know here is the meaning of each and every party. What is the meaning of transferor, transferee, remaining party? Okay. Now, because we are doing a novation, I am going out and Sudarshan is coming in this particular contract. So we need a consent of the remaining party. That means we need a consent of Bhakti here, that whether she is fine or not with this particular contract, because she will be the remaining party. She will be the remaining party, right? So consent of remaining party is quintessential here. It's very, very important. Transaction, whatever transaction I am doing with Sudarshan should be on the prevailing market rate. Whatever the prevailing market rate is there, I will be doing the transaction with Sudarshan. Why prevailing market rate? Because there is no actual market rate, because this is a OTC contract. Had it been an exchange contract, there was a real fair market value which is being traded on the exchange, but this is a over-the-counter contract. That's why whatever prevailing market rate, whatever fair value is there, I'll be doing contract with Sudarshan, right? The original contract will get extinguished. Why? Because obviously a new contract is going to be formed. A new contract is there here. I am going out, Sudarshan is coming in. That's why we do have a new contract here. So that's why the original contract will be extinguished here. Just checking what else you can remember in this. The transferor and the remaining party will be released from their obligation, obviously, because a new contract is formed between Bhakti and Sudarshan. Fees and charges, whatever fees I am charging with Sudarshan. Why? Because I am giving him a right of entering the contract. So I'm charging something, say for example, that will be outside the triple agreement, because Bhakti is nowhere concerned about this particular fees. It's between me and Sudarshan. So that's why it's outside the triple agreement. It's outside the triple agreement, right? Even if you guys are able to remember this thing, that will be fine, I think, right? Yeah. Then there was a release of financial inclusion index. Can you guys tell me the real data of March 2025 related to financial inclusion index? Anyone? Do you guys remember this? $67. What about others? Is it correct? Is 67 the correct number, guys? Yes, 67 is the correct number. Okay, 67 is the correct number. So March data is 67. The March 2024 ka data was 64.2, right? So there are basically different parameters here, like access, usage, quality. And in 2025, this is driven by usage and quality. Usage and quality, right? Because there was an increase from 64.2 to 67. The driving reason was usage and quality, right? So that's the current data. Okay, what else? Okay, so there are three parameters. The highest weightage is of the usage. लोग use नहीं करेंगे तो क्या मतलब है, right? If people are not using it, it makes no sense, right? That's why it's having the highest weight. Quality is having the last weight of 20% and access is somewhere in the middle, 35%. So this time it is because of usage and quality, right? Usage and quality is the driving reason of this time increase in the financial inclusion index, right? Okay. Investment in AIF. Any idea about this circular? Anyone? Can you guys write 2 pointers on this particular circular if you remember? Investment in AIF. Just give me a brief or maybe some keywords. Okay, no problem. What about others? Just give me a few points if you guys are able to remember this one. Okay. Anyone who can give me 1 or 2 lines or maybe some keywords or what this circular is all about? No idea? Less than 10% share. Very good. Very good, Karam. I hope I'm pronouncing your name correctly. Is it about the winding up? No, it's not about winding up. Okay, guys, let's start this one. Let's start this one. A very simple one. Let's directly start with an example only, right? And I advise you guys, whatever examples I'm giving you in between the circulars, if you are even able to remember that example, you will be able to remember at least 50 to 60% of that circular. If there is no diagram, if there is no pictorial memory, an example in your mind, it will be very difficult for you guys to remember because there are so many circulars. There are so many things, right? I am just teaching you finance, current affairs, or RBI circulars or SEBI circulars, right? There is PIB, there is what not, I mean, general awareness, quant, reasoning. You guys need to have a basic diagram in your mind related to the circular. That's it. A 1-page summary, a 1 or 2-page summary. That's it. Whenever I am discussing circulars on YouTube or in paid classes, people take so much of interest. I can say students take so much of interest. But the real effort is to summarize that thing. Because just before your examination, no matter how the good video is or how the interesting the circular is, you won't be able to revise each and everything. That's true. Just a 1-page summary, just a 2-page summary will be a killer strategy for you guys, right? Let's start this one. This is a regulated entity. Now this regulated entity has given a loan to this person, right? The regulated entity has given a loan to me. At the same time, HDFC Bank is a big bank. They are investing in securities as well. So HDFC Bank has invested in this AIF as well, Alternative Investment Fund. HDFC Bank has made an investment in this particular AIF as well. This AIF is again somewhere or the other giving me loans or advances or any kind of contribution. Again in Prateek. That's a problem. Why that's a problem? Because this is a downstream transaction now. This is a downstream transaction now. Sir, how it is downstream? It's quite simple. I have given the regulated bank, the regulated entity has given Prateek a loan. Now the regulated entity has invested in an AIF. AIF is again giving Prateek a loan. So don't you think that this is becoming a downstream transaction? This is a downstream transaction. This is a problem. Because when I have sanctioned a loan, when HDFC Bank has sanctioned a loan to me, they must have considered each and everything about me, like my credit worthiness, my each and everything, right? Now again, via this AIF, there is a evergreening of loan. There is a evergreening of loan that is happening here. there's a repetition. Maybe my credit worthiness is just 10 crore rupee, but via this AIF, the total loan obligations may be 15 crore or maybe 20 crore. That's a problem. How to solve this problem? So direction is there to solve this problem and create more and more problems for the students, but this will definitely solve this particular problem of AIF. Right? So this is the crux of this particular direction. Who will be the debtor company? Obviously, Prateek will be the debtor company here. Prateek will be the debtor company here, right? So debtor company, a company to which RE has given a loan or investment exposure within the last 12 months. If the HDFC Bank has given any kind of loan or an investment exposure excluding equity. If HDFC Bank has invested in my equity instrument, that's not at all a loan. That's ownership capital. That's ownership capital. Then I don't care. Right? Then RBI don't care. If that's a ownership capital, that's fine. HDFC Bank has the right to own 100% of my equity. That's fine. That's not a loan. But if it is not equity, that's a problem. If it's a loan, if it is an investment other than equity, that's a problem. Right? So can I say HDFC Bank is the regulated entity, AIF is nothing but AIF only? I am debtor company. As per this direction, I am the debtor company. Why? Because HDFC Bank has given me a loan. So I am a debtor of HDFC Bank. HDFC Bank is my creditor. Simple. This is the applicability. Commercial bank, including SFB, LAB, RRB. No matter SFB, LAB, RRB, everyone is included here. CB plus SFB plus LAB plus RRB. UCB, State Central Cooperative Bank, All India Financial Institution, NBFC, including the HFC. There are limits, and these limits can be important for your examination. Individual regulated entity. So what do we need to study? Are it just ये वाला जो diagram है ना, इस diagram के अंदर just incorporate these limits. That's it. That's your one page summary. Just before your examination, read that one page. That direction is over. Right? अगर मैं एग्जाम दे रहा होता आरबीआई वाला तो मैं यही करता. What I do differently is I just draw this diagram. I write all the limits here. That's it. That's my one page summary. Now my competitors will be studying each and every page. They will try to, at least for the 1 or 2 hours, they will try to. And after wasting 2 to 3 hours, they will come to a conclusion that we cannot revise each and everything. So we need a one page summary that we don't have. Right? Instead of having that, what you can do is just make a one page summary quickly. It takes hardly 5 minutes to summarize this particular direction. Do it just after this class. Once you are able to do this, you don't have to do in the near future, right? For your phase 2 as well. Individual RE investment. Individual RE. HDFC Bank cannot invest more than 10% of the AIF corpus. That's a limit, 10% limit. I think Karam has already stated that limit earlier. Cannot invest more than 10%. Up to 10% is allowed. More than 10% is not allowed. Collective RE, let's suppose collectively HDFC Bank, Axis Bank, 2-4 और बैंक लेके आ जाओ. Collectively they are investing. Combined investment by all the REs cannot exceed 20% of the AIF corpus. 10% individually, combined RE 20%. That's it. That's it. Acha, if a regulated entity has subscribed to some subordinated units of the AIF, you need to fully deduct from tier 1 and tier 2. You need to fully deduct that subordinated units from tier 1 and tier 2 capital. HDFC Bank investing in this AIF, max limit 10%. But aggregate limit 20%. That means all RE. That's my chart. That's it. Provisioning norms. If the RE contributes greater than 5%, if the RE contributes greater than 5%, The contribution is greater than 5%, then that is a problem. Sir, what is the problem? Now this RE is also investing in a debtor company. Prateek is HDFC Bank's debtor company. This HDFC Bank is contributing more than 5% in a AIF. This AIF is again giving money to Prateek. That's a problem. That's a problem. How to resolve this problem? The RE must make 100% provision of that exposure. The RE must make 100% provision of that exposure. Let's suppose the contribution is 7%. Up to 5% it is fine. 2%, for this 2% you need to make 100% of the provision. So it's so confusing. Earlier you told us 10%, 20%, now you are telling us more than 5%. What is this? Let me just summarize. Any RE, if you are contributing, 5% is the limit. Sorry, 10% is the limit. 10% is the limit. Right? On individual basis. Let me just write it, individual basis. IND. If all the REs, combined RE, they are contributing, 15% is the limit for all. But now this is a separate case. If this is a downstream transaction, to the debtor company, and you are going above 5%, then 100% provisioning. Above 5%. Now this will be my chart. I know my handwriting is too bad, but that works for me. That works for me, right? You guys can also. Now I won't be going through this particular circular at the end of my examination. मैं अगर एग्जाम दे रहा होता तो मैं सीधा ये चार्ट पढ़ता, rather than going into each and everything of this detail. I do have so many circulars to cover, right? With this one chart, I can complete each and everything. Now that should be your preparation strategy. That's how you should approach your examination. Don't waste time, right? If I study one circular, just giving you a chota sa gyan. Let's suppose there are 10 circulars in my course. What do you think? Who will be getting a higher marks in the examination? The one who is reading 4 circulars 100%, or the one who is reading 10 circulars 70 to 80%? What do you think? The first case or the second case? Obviously the second case. Obviously the second case. Why? Because your surface area of luck is increased, right? Chances of getting more and more questions from 10 circulars are higher as compared to the 4 circulars. Maybe you won't be getting one question from the 4 circulars. There is a chance. So obviously go for second case. We cannot revise each and everything just before your examination, though we will be doing this in this class. But after even attending this class, just before your examination, you will be only able to revise the 70 to 80%, and that's more than enough. That's more than enough if we are still able to do it. So what do you exactly mean by 100% provisioning? On which entity's perspective? On regulated entities perspective. Let's suppose if I have contributed 100 crore, the 5% was, say for example, 60 crore only. So ideally I should have contributed 60 crore only. What about this 40 crore? I'm showing this as my asset. I'm showing this as my asset. No need to show it. Give 100% provisioning. Write it off. Give 100% provisioning. Write this 400 off. That's what the meaning of creating 100% provision is. Ideally, I should be only keeping 5%. Anything above 5%, 40 crore, write it off. ओके, वही सब लिखा हुआ है जो मैंने आपको बताया, राइट। अब there are two approaches. You can go page by page, you can go one page. I will prefer always a single page, right? Because that won't be putting any kind of pressure. I have ample of time to study different things as well, because it's not the RBI circular only that will be coming in your examination. There are so many things. We need to always divide the time, right? So that will be the best approach. Next one, again, a formation of a new district in the state of Arunachal Pradesh. So whenever there is a new district, we need to assign the lead bank responsibility. So two districts here are created and SBI Bank will be the lead bank. Inclusion of Devanagari Sahkari Bank Limited in the second schedule. Again, similar to the NSDL Payment Bank, it is one more addition in the schedule commercial bank. Inclusion of Ahmednagar Market Cooperative Bank and second schedule. Again, it's an addition in your second schedule. Next is the Digital Payment Index March 2025. Can you guys tell me the data of DPI? Anyone? What is the current data of DPI? Let's see who remembers. And don't search it on Google. $493.22, 495 something, 80.1%, 493. Okay, guys, the correct choice is 493, March 2025. Okay, 493.22. So we can see a consistent increase in the DPI, 493.22. 5x का ग्रोथ हुआ है यहाँ पे close to, and it is due to payment infrastructure supply side and payment performance. These are the two driving reasons: payment infrastructure supply side and the payment performance, right? This is the data, and there are parameters like payment enablers, payment infrastructure demand side, supply side, payment performance. Payment performance is having the highest weight. So because of payment performance and supply side payment infrastructure, there's a increase in the DPI, right? So I know that this is not from your RBI circular, this DPI data. इससे पहले भी जो हमने फाइनेंशियल इंक्लूजन इंडेक्स पढ़ा था, फिर अभी जो ये पढ़ने वाले हैं, ग्रीन फाइनेंस फॉर नेट जीरो गोल्स. बट व्हाट आई वांट टू do in this session is cover at least the important things, not just the circulars, but some of the things related to circular. Now this is from a RBI deputy governor speech, so I won't be covering it fully. I'll be just underlining few words that you guys just need to just give it a quick reading, right? Much detail of this speech. It will be major things, that's it. And then again we'll be moving to the circular, right? So Shri M Rajeshwar Rao, Deputy Governor, Reserve Bank of India, has given this particular speech related to green infrastructure financing for achieving the net zero on 18th of July 2025, right? So the climate financing gap is 2.5 trillion annually. That you can remember. Apart from this number, you need to know about greenwashing and lack of MRV. He told that there is a lack of MRV. Now what is MRV? Monitoring, reporting, verification system. An independent monitoring, reporting and verification system, that you can remember. Achha, there are two types of approaches. Endogenous and exogenous. So endogenous enablers are internal to the financial system, and exo one are the external. Even if you are able to remember these things, that will also be fine, right? That will also be fine. So not covering the whole speech, because there are so many speeches and all. This batch is specifically related to the RBI circular. Still, I'm not ignoring it as well, right? Just covering the keywords. Next was a draft direction, digital banking channel authorization direction, digital banking channel authorization direction. So the objective was to provide a comprehensive regulatory framework for authorizing and supervising the digital banking channels. Now we are having so many digital banking channels like internet banking, like mobile banking. This is a comprehensive framework, right? It is still in the draft directions. So definitely we'll be covering it in a crisp manner only. Okay. So the regulated entity, the banks need to draw a comprehensive policy for all the digital banking channels, whatever channels you are having, just draft a one comprehensive policy. Just draft a one comprehensive policy, and who will be responsible for the oversight? No matter what, senior management will be the responsibility, right? Senior management will be having the responsibility for the oversight. Then if it's just a view only banking facility, now there can be two types of facility. It can be view only, it can be transact. If it is a view only facility, CBS must be fully implemented, IT infrastructure must be in place. If it is a transactional banking facility, you cannot directly go for transactional banking facility. First, if you are having just the view only facility, you need to apply via Pravah portal, RBI, for taking the transactional facility, right? CBS implementation should be there. You need to comply with the CRAR norms, because again, you are availing the transaction facility as well. Again, it can impact your capital structure. Your net worth should be greater than the regulatory minimum or 50 crore, whichever is higher. You need to have a net worth of more than 50 crore for availing this one, right? So these are the few things that you can remember here. Then you need to comply with so many IT regulations. Again, most of the channels are IT related only, maybe mobile banking, maybe internet banking, right? Yeah, that's it. So what major things you need to remember is, if it's a transaction facility, then net worth requirement of the regulatory bare minimum or 50 crore, whichever is higher. 50 crore, whichever is higher. So 50 crore is the keyword here, is what I can say, right? Then lending against gold and silver collateral directions 2025. Now this can be important for your examination. Lending against, because it's not a draft direction, it's a full-fledged direction which is already there on the website. Lending against gold and silver collateral, right? So this is from the June month. This is from the June month. Can you guys tell me some of the highlights of this circular? Whatever things you are able to remember, no matter. थोड़ी बहुत याद आ रही हो, कोई बात नहीं. You can tell me. I can understand there are so many things. You are working hard, guys, right? And it's fine if you are not able to remember it. Still, if any, you can let me know in the comment section. Collateral reduced. Okay, 2 minutes, sir. Can recall. Sure. I also need 2 minutes. I'm speaking for the last 1.5 hours. I'll also get a break. Okay, effective from 1st of October 2025. What else? Bullions are not eligible in this. Very good, Bhakti. What else? Gold bars not eligible. Okay. Gold ornaments maybe 1 kg. Okay, only SCBs and UCBs can provide the need based on working capital loans using gold as a collateral and silver around 10 kg. LTV ratio related with सही है चलो. Okay, let's start this one. RBI has restricted lending against primary gold. What is primary gold? Bullion. Why? Because it's purely speculative. It's purely non-productive usage, right? So lending is allowed only in case of gold jewelry, ornaments, coins, and so on, not in bullion, right? Okay. The implementation timeline is 1st of April 2026. Okay, 1st of April 2026. Next one. What else we need to remember here is LTV ratio, loan to value ratio. How much value your security is having. Let's suppose gold is having a secure worth of 100 rupee, and how much loan you have sanctioned. Let's suppose 60 rupees. So 60% here will be your LTV ratio, right? In this example. So there's a criteria of LTV ratio as well that you need to remember. LTV ratio can be important for your examination, right? The fact that bullion is not allowed here. The lender must be having a credit policy. This can be important. If loan is about 2,50,000, if the loan is about 2,50,000, this requires a credit assessment, right? There should be a credit assessment. There should be a verification of the repayment capacity of the customer as well. This is very, very important. High probability area from which question can come. Loan exceeding 2.5 lakh requires a credit assessment and a verification of repayment capacity. Please do remember this one, right? So if it's a single borrower, maximum LTV ratio is also there. Detailed credit assessment of the borrower's repayment capacity if the total loan amount against eligible collateral is above 2.5 lakh rupee to a borrower, right? Renewal and top-ups are allowed only in the LTV limits only, so we need to study the LTV limits as well. Acha, lending against primary gold or silver, gold ETF, gold mutual fund, very, very important. This line is very, very important. I cannot do lending based on the gold ETF because that's not real gold. It is a security which is based out of gold, right? It's a gold based financial instrument. Bullet repayment capped at 12 months. Then this is the LTV caps that you need to remember for your examination purpose as well, up to 2.5 lakh 85%. Then just you are going up, the LTV will start going down up to 2,50,000, more than 2,50,000 to 5 lakh 80%, above 5 lakh 75%, right? So at every level there will be a reduction of 5%. 85, 80, 75, right? Yeah. Rest of the things are, I can say, more of procedural and related, and Collateral release, once you have settled the loan, then then the regulated entity must return that gold within 7 working days, right? Within 7 working days. Yeah. If you have not returned that gold in 7 working days, then there is a penalty of 5,000 per day. So that's common, right? It was there in the deceased customer related requirement as well. There it was, I think, 15 days, right? If it's crossing the 15 days, then 5,000 per day. Here it is also 5,000 per day. So you don't have to remember the penalty amount. Just need to remember the number of days. Right? So this particular circular can be important. And here are the short summary key pointers as well. Just before your examination, if you have not created your own summary pointers, what you can do is just go with these pointers. It will again be helpful. Right? Adjustment facility. So because of that particular monetary policy committee meeting, there was a adjustment in the facility. I'm ignoring this. Why? Because we have already the new monetary policy committee meeting, right, in October month. Review of qualifying asset criteria, very, very important. High probability question. Qualifying asset of NBFC MFI shall constitute a minimum of 60% of the total asset. Please do remember this particular limit. If an NBFC MFI fails to maintain the qualifying asset for 4 consecutive quarters, it needs to approach to the Reserve Bank of India for the improvement plan, basically. So that is the bare minimum you need to keep. Qualifying asset of NBFC MFI shall constitute a minimum 60% of the total assets. Whatever total assets you are having, at least minimum 60% you need to have qualifying assets of NBFC MFI. Please do remember this particular limit, 60% of the total assets. Then again, there was a CRR cut as well, and I think one date was falling in October as well, right? Just let me read this. Okay, 6 September, 4th of October, yes. So there was a release of liquidity on 4th of October as well, right? On 4th of October as well, there was a release on liquidity, and I can now relate that on 4th of October. And what was on 4th of October? I think it was Saturday, yeah. That's why the bank stocks are up as well today. In stock market also, the bank stocks are up. Why? Because there was a recent liquidity release due to CRR cut on 4th of October on Saturday. Again, an old news. Why? Because we already do have a new monetary policy meeting of October. Okay. Prudential treatment of PSL short form contribution urban cooperative banks can be important. Just need to remember the limit. You just need to remember the limit. What is the limit here is the urban cooperative banks are required to meet the PSL targets just like any other bank, right? So the UCBs are also required to meet the PSL targets. Now let's suppose they are not able to meet the PSL target. What they can do is just make a contribution to funds like NABARD, NHB, SEDBI and Mudra, right? Just make that contribution. So there is a limit. There is an exposure limit for UCBs. If you are a single borrower or a single party, then maximum 15% of the tier 1 capital. If group of connected borrowers or parties are there, then maximum 25% of the tier 1 capital. So RBI just clarified that if you are making a contribution because of the PSL shortfall, you are making a contribution to NABARD, NHB, SEDBI, Mudra. This particular contribution will be exempted from the limit. This is the exposure limit. The contribution to NABARD, NHB, SEDBI, Mudra will be completely excluded for this purpose. Whatever contribution you are making in this particular fund will not be counted in this limit. So this limit will remain fresh only for you guys. 15%, 25% single party, 15% group party, 25%. Why? Because this is for the PSL shortfall. This was not an investment. This is for the PSL shortfall. That's why we are doing it for a good purpose. Why to take it? Why? To exhaust the limit. That's why RBI has updated the circular. So please do remember this thing, that this limit won't be counted here. This won't be counted in this limit. Right? KYC, Know Your Customer Amendment Direction 2025. Do you guys remember the date of this KYC customer? It's a very straight circular. It's a very simple one. You just need to remember the dates. That's it. Nothing else. If you are able to remember the dates, sorted. Any idea about this one, guys? Let me give you a hint. If this is a low risk customer, then a prescribed date was there by RBI. Low risk customer ki date. Let's suppose a customer is not having KYC updated and it's falling in the low risk customer category. Then by what date the bank needs to mandatorily do the same? A customer KYC has become outdated and it is categorized as a low risk customer. Then by what date the bank needs to complete the KYC? The bank needs to update the KYC basically. Okay, what about others? Do you guys remember the date? So it was something like 1 year or a particular date, whichever is later, if you guys are able to remember. No? Okay, no problem at all. Have a look. Relaxed norms for the low risk customer. Banks or RE must allow all the transactions for the customer that are categorized as low risk. Let's suppose I'm a low risk customer for a regulated entity, then all the transactions will be allowed even if my KYC has become outdated. Doesn't matter if my KYC has become outdated, I can do all the transactions in my bank because I'm a low risk customer. I'm in the low risk category of this particular regulated entity. This date is important. This is the crux of this circular. KYC must be updated within 1 year of falling due. Let's suppose it is due today. Then 1 year from this particular date or 30th June 2026, whichever is later. So here we can see that they have given a later date, whichever is later. That's why it's a relaxation, right? They have relaxed the norms. If you are a low risk customer, you are free to update your KYC within this particular timeline. So please do remember this date. Right? Please do remember this particular date. So applies even to those whose KYC update was already overdue before this particular circular. Doesn't matter. It applies to you as well. Even if your KYC was already outdated, you also need to comply with this particular provision. Then again, banks have allowed the use of business correspondents as well for the for the KYC updates. The business correspondents can also do the same, right? It was also an update. Yeah. So that's what the timing is, right? Please do remember the dates. Please do remember the dates. Can be important for your examination. Rest, I'm checking what else they can ask. Yeah, that's fine. Acha, this one can be very, very important. Stripping or reconstruction in state government securities. Tell me the key highlights of this particular circular. Anyone? Stripping or reconstruction in the state government securities. Any idea, anyone? The most important circular. Okay. पढ़ा है पर रिकॉल नहीं हो रहा. Acha, what do you guys mean by stripping? Let's suppose there is a security and I'm just stripping it apart. So can I say that I'm segregating that security? I'm segregating the components of that security. Now it can be interest component, it can be principal component, right? So that's what stripping is all about. I'm reconstructing that security, or maybe I'm stripping that security. So I'm just making parts of that security, right? This was already allowed in the central government securities. Now it is again allowed in the state government securities as well. So even if we talk about the government bond is a fixed interest bearing security, right? Fixed interest and principal bearing security. So there are interest components. There is a principal repayment obligation as well. Let's suppose it's a 10-year bond. Let's suppose this is a 10-year bond. So for the 10 years, I need to pay interest every year. So 10 times can I say I need to pay the interest. At the end of 10th year, I need to pay principal. So instead of viewing this as a single bond, let's view this as 11 financial instruments. Sir, how 11? 10 times the interest payments. 1 time is the principal payment. Can I segregate all the interest payments? Let's suppose John wants to buy the interest payment of 5th year. Take it. Bhakti wants to buy the interest payment maturing on the end of 7th year. Take it. Sudarshan wants to buy the principal element after 10 years. Take it. Karam wants to buy the interest of 2nd year. Take it. How? First, I need to segregate the interest components. First, I need to segregate the principal component. So 10 times interest, 1 time principal, 11 securities I can create by stripping this bond. That's what the concept of stripping is. This used to be a cake. Now I have segregated all the components into different slices, right? That's what stripping is all about. Now they have clearly written this. This will be in addition to the stripping reconstruction already permitted since April 2010 in central government securities. So since 2010 in central government securities, we are already doing it. Now it is also permitted in state government securities. What is the full form? What is the full form? Separate trading. Strips. Separate trading of registered interest and principal of securities. Separate trading of registered interest and principal of securities in the state government securities. That's what the full form of strips is. Separate trading, as the name says it all, we will be separately doing the trading in interest as well as the principal of the security, right? Even if you don't remember the full form, no problem at all. The name says it all. I'm going to do separate trading in the registered interest as well as the principal of the security. That's what the full form is. It's so simple, right? It's very easy. So here I'm just segregating the interest components and the principal components. Or why do we even need that? What is the requirement? It's a bond. It looks good. Why you are segregating it into 11 components? Because there is a need. Because there are buyers in the market. What if Bhakti is an insurer company? What if Bhakti is operating an insurance business? She is taking premiums from the customer. She's giving an insurance service. What if after 10 years, she may have a liability? So whatever she is receiving as premium, she's investing somewhere. And she wants that after 10 years, some instrument is easily be able to settle the liability. Some instrument can easily settle the liability. So what she can opt after 10 years, I'll be repaying the principal. She can just buy the principal component of this bond. She don't want interest. She just want the principal payment. Was it possible earlier? No, it was not possible. Now it is possible. Why? Because I'm just stripping that bond apart into multiple securities. So now she can freely buy just the principal component. Just the principal component. Right? That's what the concept is. Now let's suppose after 10 years, I'll be paying 1 lakh rupees as principal component. This is the face value. Obviously, today she'll be paying me much lesser. Right? Let's suppose she's just paying me 40,000 as of now. After 10 years, I'll be paying her 1 lakh rupees. So that's what the benefit is, right? That's what time value of money is. So can I say that these all securities will be traded as a zero coupon securities, ZCBs? Why? Because they are offered at a discount right now. She can buy the bond principal component right now at 40,000 rupees, and after 10 years, I'll be paying her 1 lakh rupee. So don't you feel it's a zero coupon bond as well? Sir, how many circulars we are yet to do today? Okay, just let me have a look. So guys, it will be a 2-hour class. Try to understand that I need some time in order to complete the circulars, because there are so many circulars, right? So at least I need 2 to 2.5 hour class in order to summarize each and everything very well. Otherwise, if I start rushing, it will be difficult for you guys in understanding, right? So just having a look, like just give me a second now. Just give me a second. Five to six more. Okay, anywhere around 5 to 6 that we need to still cover. Okay, no worries at all. I think I can do it in the next 20 to 30 minutes because the circulars are not too big. This one is a lengthy one plus an important one as well. That's why I'm sparing enough time here, right? So that's what stripping is all about. I'm segregating the coupon, I'm segregating the principal payments as well, right? Then what else we can read from this particular circular? The effective date here will be 12th of June 2025, so it's already effective, right? Eligible securities, please do remember this one, must be fixed coupon securities only. So it should not be a variable coupon security, it should be a fixed coupon security only. Must be state government issued or union territory issued. Why? Because central government was already permitted. Now it is state government or union territory issued. Residual maturity must be up to 14 years. It should be there at least up to 14 years. Minimum outstanding amount 1000 crore. It should be having a minimum outstanding amount of 1000 crore. I don't strip small securities. At least I need a 1000 crore minimum outstanding security, right? must be SLR eligible. If a bank needs to invest in SLR security, it can do it by investing in my bond as well, in my stripping instrument as well. It must be eligible for the SLR as well. It must be transferable in the secondary market as well. So these are the basic conditions basically. Right? Now these things can be important for you guys that we just studied. These limits can be definitely important for your examination perspective. Right? And please do remember that it is more of a zero coupon bond, right? It's more of a zero coupon bond. Okay. Next one is the RBI electronic trading platform. Electronic trading platform. Now what is ETP? What is ETP? This direction is just there to give a regulatory oversight, bring transparency and fairness in the electronic trading of the eligible financial instruments, right? So ETP is nothing but electronic trading platform. It's just a platform where the different securities are being traded, right? So all the entities need to comply with this particular direction. Any electronic system for trading eligible financial instruments can be called as ETP, electronic trading platform. What you need to remember here is no entity can operate as ETP unless and otherwise they are complying with these particular ETP directions and without obtaining prior authorization from the Reserve Bank of India. If you want to operate as a ETP, you need to take prior approval of the RBI, right? So mandatory RBI authorization is required for operating as a ETP. The very first thing that you need to remember. Then must comply. Must be a company incorporated in India. You need to be a company incorporated in India. You cannot be a foreign company and you cannot operate a ETP if you are a foreign company. You need to be incorporated in India only, right? Entity or at least 2 key managerial personnel should be having at least a 3+ years of experience. So your 2 key managerial personnel or your entity needs to have at least 3 years of work experience in the financial market infrastructure to become a ETP. That's very well required. This can be important. Minimum net worth should be at least 5 crore. At least 5 crore needs to be the minimum net worth, and you need to have a robust technological infrastructure as well, right? So these are the bare minimum requirements. I think net worth requirement is very important. Plus this general requirement, you need to be incorporated in India. At least your entity or at least your 2 key managerial personnel need to have 3+ years of experience here, right? To become a ETP. Obviously, if you want to become a ETP, you need to apply to RBI via Prava portal. Your authorization is not transferable. Let's suppose I am a ETP. I cannot transfer my authorization to John or Bhakti. Why? Because that's not transferable. That's not transferable, right? Data retention as well, because you are a ETP, you are having a lot of data of securities that are trading on your platform. Store all the trade related data for at least 10 years. For at least 10 years, you need to store all the trade related data. In case of any investigation which is going on, once it's concluded, post investigation, you need to keep the data for the next 3 years as well, right? So that's the basic requirement here in the ETP direction, right? I think even if you are able to cover this much in the ETP direction, it will be fine. Then there was a master circular related to the credit facilities to the specific communities like SCs and STs. So a master circular was there. In the planning process, there should be district coordination is what stated in the particular circular. There should be district level consultative committees. DLCCs should be there under the lead bank scheme for key coordination with the bank credit and with the government scheme, because the bank credit schemes should relate to the government schemes, should relate to the government development scheme. So there should be a district coordination. And who is better than the lead banker? Who will be better person than the lead banker to deal with this thing, right? There should be district industry center as well. So bank need to establish closer ties with the district industry centers. Why? Because they want to promote SC and ST employees for the employment opportunities in the district industry centers as well. Then planning should be at the block level. right? Bank should create a bankable scheme tailor made for different SC and ST self employment needs as well. There should be a process review as well. There should be a lending policy review as well. You need to timely review each and everything, like what timely sanction of loans are being done or not, what adequacy and productivity of loans are there or not, right? Whether the loans are self liquidating. Now what do you mean by self liquidating? Are those guys even able to generate enough cash flow that they can self liquidate the loan? We don't have to write it off as a bad debt, right? We want them to pay it off. So that's a self liquidating loan. They are generating enough returns via employment, via different activities, so that they can pay the loan. That's what self liquidating loan is all about. Then rest of the things are more of a process oriented thing, right, rather than just the okay. So this one you need to remember: loans to state sponsored SCST organization. Let's suppose you are offering a loan to state sponsored SCST organization for purchasing or supply of input or marketing output, qualify as a PSL. Let's suppose a bank, HDFC Bank, has given a loan to the state sponsored SCST organization who is purchasing, supplying inputs, or maybe marketing output, qualifies as a PSL loan. That will be counted as a PSL loan for the HDFC Bank, right? So you can remember this one at least. This can be important. Okay. Application rejection protocol, loan rejection must occur only at a higher level, not at a branch level. If you want to reject the loan, that it should occur above the branch level, not at the branch level. Plus, there will be a reservation under the major government scheme as well, DAY NRLM. 50% of the beneficiaries under the scheme must belong to the SCSTs, right? There is a reservation here in the DAY NRLM scheme as well. Plus, there is differential rate of interest scheme as well. Loan up to 15,000 will be given at 4% for the productive activity. If they are involved in any kind of productive activity, then up to 15,000 you'll be getting a loan at just 4%, right? Then minimum 40% of all the DRI loans, differential interest rate loans, must go to SCs and STs specifically. You'll be getting the SC and ST borrowers can get additional 20,000 as well as the housing loan under this particular scheme. This is apart from that particular limit of 15,000, right? You can additionally get 20,000 as a housing loan as well in this particular scheme. Yeah, that's what the major updates are in this particular circular, right? Summary pointers are also given for you guys. Next is the RBI Project Finance Direction. Now this is a complicated circular, right? Just try to remember the crux of this particular circular. Now if you go into too much detail of this particular circular, it's quite huge, right? It's better to filter out the most important things from this particular circular that have a high chance of coming in the examination, rather than reading each and every line, because that won't be exam oriented. Hardly one or two question can come, right? Maybe hardly one question from this particular circular. Now you need to at least know the crux of this circular, because this can be important. Okay, project finance direction can be important. So this is the applicability: commercial banks, NBFCs, primary cooperative banks, and all India financial institution. The implementation date here is 1st of October 2025. The projects with financial closure before 1st October 2025 won't be applicable, right? Project finance directions won't be applicable on those projects who are having a financial closure, that too before 1st of October 2025. Now, what do you mean by financial closure? Any idea, guys? What is financial closure? What do you mean by financial closure? Anyone? What is this financial closure basically? Any idea about the financial closure, guys? Okay, no problem. I'll tell you what financial closure is, but before that, understand that a resolution of stress loan is not qualifying the definition of project finance. If you are not qualifying the definition of project finance, you will be continued to be guided by the guidelines of the prudential framework here, right? If project finance is not applicable, you will be covered by the you'll be covered by the prudential norms here, right? Okay. Now, what is the meaning of project finance? Refers to the method of funding a project. We are obtaining finance for a project. So funded primarily by more than or equal to 51% by the cash flow from that project only, right? So refers to the method of funding a project in which the revenue to be generated by the fund primarily for the security of the loan, for the source of repayment. The predominant source should be at least 51%, must be from the financial cash flows arising from project which is being financed. So you guys are able to at least fund that finance more than 51% by the cash flows of that particular project. You are able to generate cash flows out of that project, and then you are able to pay off that particular project finance with the cash flows that are coming from the project. Reviewing of the transaction, no, not reviewing of the transaction. Financial closure is something different. Now here is the meaning of financial closure. Refers to the date on which the capital structure accounting for a minimum 90% of the project cost becomes legally binding. Let's suppose I want to raise 1000 crores. What is the 90% of 1000 crore? 900 crore. So if I have received the legal commitments, 1000 crore is my project cost. I have received legal commitments to raise 900 crore. So that's 90%. If I have received that much commitment from people that they will be investing 900 crore in this particular project, that's my financial closure. That's my financial closure, right? I'm good to start my project. That's what financial closure is all about. Acha, what is DCCO? Date of commencement of commercial production, commercial operation, sorry, date of commencement of commercial operation. That's what DCCO is all about. So what you guys need to remember in this particular circular is there are three phases: design phase, construction phase, and then operational phase. Right? Every project has three phases: design, construction, and then operational. DCO. Design, construction, and operation. You need to remember the starting point of each and every date, each and every phase. Planning, approvals, till the financial closure. Till your financial closure, you are always in the design phase. Now, from your financial closure, once you have achieved the 90% commitment of your capital structure, your financial closure is done. So, from that financial closure to the day before the actual DCCO, that means this is your initial stage, this is your financial closure, this is called as design phase. This is the design phase. Now, your financial closure is done till actually the date on which you have started the commercial operation. This particular period will be your construction phase. From the financial closure to the actual commencement date, this will be your construction phase. From the actual date to the loan full repayment, this will be the operational phase. Let me redraw this chart. Let me make it more clear. This one is my starting phase. Then there will be financial closure, the date when I achieved 90% of my funding requirement. This is the design phase. Now, from the date I have achieved my financial closure till the date of commercial operation, actual DCCO, this is my construction phase. And from the actual DCCO to till the date of full loan repayment, to the rate of full loan repayment, till the time I'm able to fully repay my loan, this will be the operational phase. So these are the three phases in this particular project finance direction, and you need to remember the timelines as well, right? You need to remember the timelines as well here. Then what else you can remember here is under construction projects where the aggregate exposure of the lender is up to 1500 crore. So the lender, let's suppose the HDFC Bank has an exposure of 1500 crore only, up to 1500 crore only, and the project is under construction in nature. No individual lender shall have exposure which is less than 10% of the aggregate exposure, right? So if you are an individual lender, then no individual lender shall have an exposure which is less than 10% of the aggregate exposure. So say for example, for projects where the aggregate exposure of all the lender is more than 1500 crore, then you need to restrict yourself to 5% or 150 crore, whichever is higher again. Right, so there are certain limits here in this particular circular that you need to remember, like this particular limit, this particular phases of the projects, right? Now I know it's a complex circular, and project finance in itself is quite complex. Why? Because project finance are basically huge projects, right? They are long-term projects and they require a lot of money. That's why there is a particular direction governing the project finance. Now, this prudential conditions also you need to remember. A lender shall ensure availability of sufficient land. For infrastructure projects, 50% requirement is there. For any other kind of project, 75% of requirement is there. These two limits again you need to remember. Then what else? Just checking. Acha, there is a permitted cost overrun as well. There is a permitted cost overrun as well. What is the cost overrun meaning is, let's suppose the total cost is 100 crore. So up to 10%, even if I incur 110 crore, that's even fine. That's also fine. I will still be in the standard asset classification. HDFC Bank will not classify me as substandard or doubtful. They will consider me as a standard asset only because I have just overrun my cost. Matlab I have exceeded my cost by 10%. So that's very well within the permitted range. So you need to remember this 10% limit as well. Right? There are illustrations as well in this particular circular. You don't have to go through these illustrations as well. Right? Phase 1, I can say that unlikely. Right? It's more important for your phase 2 purpose. That's why I'm covering it in a very crisp manner only, because I want to make these classes more relevant for you guys for your phase 1 preparation, right? So that's why I'm just covering the major things out of it. And for your phase 2 as well, you need to remember this provisioning standard asset loan criteria as well, right? Provisioning for the standard asset as well, but it will be more important for your phase 2 again, right? Yeah. So even if you are able to remember the crux of it, like what project finance is all about, what is the applicability date and so on, but high probability that it can be asked in your phase 2 examination rather than phase 1, right? Because it won't be fair enough for phase 1. Now this can be important for your phase 1 examination. Review of priority sector lending norms for the small finance bank. If you are a small finance bank, then your priority sector norms are now changed. Can you guys tell me this one? Any idea? What is the revised PSL norms for the SFBs? Okay, let's have a look. The SFBs were required to allocate 75% earlier, right? 40 plus 35. 40 was to the select subsectors as per the RBI's prescribed norms, and rest of the 35% anywhere as per their will. Now it is reduced to 60%. So from the 75%, now it is 60%, and this can be very, very important for your examination. Now from the 60, 40 must be allocated to the select subsectors within the PSL. Rest of the 20%, you are free to allocate in any PSL subsector of your choice, right? That's what the amendment here is, right? That's what the major amendment here is, right, guys? So this is from the review of your priority sector lending norms for small finance bank. Very, very important for your examination perspective, right? Now the next circular is from the RBI tightens the AEPS rules. The AEPS means your Aadhaar enabled payment system, right? So I'll be covering this in my tomorrow's class. Okay, guys. So this will be the last circular from the June month, I can say. Now we'll be going back to the previous month. So we have concluded the June, July, August, September, right? अब हम क्या करेंगे, पहले के मंथ्स को कवर करने का यहाँ पे स्टार्ट करेंगे from the next session. So this particular circular is from your June month, which will be, I'll be covering it in my next session, most probably tomorrow only, right? So thank you so much, everyone, and just give it a quick reading of the most important things that I told you from the RBI circulars, and read it in a crisp manner rather than reading line by line. Okay, so thank you so much. Bye bye, take care, see you soon.